Let's ask Chief Market Analyst for MIG Bank, he's Paul Day. Paul,
morning.
All this pressure on the euro has not really made it move that much, and we're talking about the Greek effect.
Yes, I mean, I think at the start of this year, I think quite a few people have had this expectation that the markets were going to recover, and then third quarter we get rate hikes. I think the numbers over the past week have stymied a few people's positions, so where the euro did look a little bit wobbly earlier on this year, it's come back a little bit. But then on a relative basis against sterling, for example, it's continuing to struggle. And I don't see the problems going away with the pigs in Europe. It's interesting, in the Telegraph today, there's a commentary by Ambrose Evans-Pritchard talking about a new report by the EU, or by the ECB. I think it's called Withdrawal and Expulsion from the EU and
There's no mechanism for it, though, is there?
No, absolutely, but it's just this expulsion word. I think these people are being told they're naughty boys, but it's quite interesting the way that that Greece has been seen as the worst out of the lot. When they've got a new administration in, they're trying to sort their problems out, and I do think it's quite linked to, strangely, the Chinese control of the port of Piraeus in Greece.
Well, walk us through what your concerns are here, and why the Chinese are playing here, or whatever, in your view.
Well, the port of Piraeus is a fantastic deep water port in the eastern side of the Mediterranean. It allows anybody who brings goods there to import right the way up the eastern corridor of Europe, up to the Baltics, which is quite a big market for Germany. The port is now under control of a Chinese company. And certainly the feelings that we get is if push came to shove, where Abu Dhabi was Dubai's big brother and stepped in at the last minute, Greece would be China would be quite happy to go in and lift a private placement of Greek junk bonds. So I think that the Greece situation is probably overplayed, and the Chinese have lots of money, and they have the ability to step in and invest where they want to make a strategic alliance.
How would the European Central Bank react to that, do you think?
Well, this is why we're getting the comments from Stark, I think. You know, Stark works for the Bundesbank. I don't suppose Germany are very happy if China have a beautiful route in to sell their products across Eastern Europe. OK, but, you know, what about the dollar itself? Like, you know, again, it's struggling to make any ground, and you'd think with this environment in Europe that it would be. Well, what's happening there? I think the dollar will do OK. I don't think but many markets are really stuck in a range at the moment. I think the numbers will be OK for the first part of the year. Second half of the year is obviously, do we withdraw stimulus, and what happens then? You know, again, it's quite a big guessing game. The main focus that we have at the moment is in euro sterling. That's the trade that we're looking to put on at the moment, selling euros against sterling above 90. There's a very good...
Where does it go to? I mean, people have been predicting 85. Some people are sitting there have been predicting we're going up to 95 very soon. Well,
we've heard a lot of those stories, and when we put the call out last week to say sell above 90, we did have a lot of people coming straight and say, no, we don't believe that it's going to carry on going up. The reason that we were looking at it, there's a very good correlation between 10-year gilt yields and the level of sterling performance against the euro. So as gilt yields rise, you tend to see sterling outperforming a euro, which has happened since Lehman's went bust. And that's broken down over Christmas. You saw gilt yields rise by about 50 basis points, euro sterling be stuck. But the fact that that's gone like that, we think the correlation will continue to hold. So that means sterling should outperform. It roughly targets around the 85 region. So that's...
What about sterling dollar as well?
Well, sterling dollar's in a range at the moment, 157 through to sort of 168, 170. We're right in the middle of that. I don't mind either currency at the moment. So I wouldn't mind holding both of those against the euro. I think.
But your trade of the day is euro sterling.
Absolutely, yeah. But I still think euro dollar will eventually, during the first quarter, will get down to sort of 137.50 to 139.
But we're going to need some sort of event for that to happen, aren't we?
No, I just think that there's some reasonably large positions that have been built up in the euro, and I think people might look to flee. And obviously we've got the perfect catalyst there in what's going on in the outlying countries.
Right. Just very quickly, where does all this leave the yen? We haven't talked about that.
The yen, longer term, I'm reasonably negative for it. The interesting thing for the yen this year will be, if we do get a double dip, what happens? Do people buy the yen again? I don't think they necessarily will. I think last time was purely because those positions were being taken off. I don't think the yen should this time be seen as a flight to quality currency.
Not so clear-cut.
No, absolutely. Something like sterling yen, where I've been very negative over the past couple of years. I've recommended selling it at 215, then 160, then 150. At the moment, I'm actually a little bit, you know, either way, and it wouldn't surprise me if something like sterling yen pops back up to maybe 190 later on this year.
Paul, thank you so much for coming in. Paul Day there from MIG Bank.